Everyone wants to know the next big stock for 2026. They often focus on the hype instead of the fundamentals of the company and kind of what the company has going for itself. So, in this video, I'm going to be breaking down the top three stocks that I believe will outperform the markets in 2026 and why I believe these business models will outperform based on their advantages and what they have going for them. The first pick on my list should be of no surprise. It's Amazon. I have been pounding the table on Amazon. I had my goal of getting 50 shares last year, which I was able to do. Now I have even more than that. And I think Amazon has really been lagging behind the other Mag 7 in terms of stock performance. However, it has not been sleeping when it comes to being a productive company. Overall, things that we can look at, I mean, first off, we can just look at the revenue. It's up and to the right over time. Even if we just look over the past 3 years, the revenue keeps increasing at about 13%. I'm super excited for this. Now, this is what really is going to drive Amazon. Essentially, it's the growth rate of their Amazon Web Services, AWS, which is their cloud component of their business. So is we see this reaccelerate here into the 20s. If it stays about 20% or even more during 2026, I think we're going to see a big turnaround in Amazon and the stock is really going to fly this year. As well, other things that are like making me bullish on the company. I mean, they're reducing their labor force because they have more robots and stuff in their facilities. They're automating their facilities, and ultimately, they're going to increase their operating margins, right? We're going to see over time these operating margins are going to keep going up and to the right. They're going to become more and more profitable. They're going to be doing well. Um, I think Amazon overall is a great company. If we were to look at the Amazon stock price over the past 5 years, only 51% gain. That's underperforming the S&P 500. If we just look at the year to date so far, we're up 8%. So it's about a pretty good start to the year. But yeah, anytime that I see this anywhere below 230, I'm definitely going to be picking up shares. I think we can definitely see Amazon hit 300 by the end of the year. Kind of driven by the movements that we've seen in Google as the sentiment turned. I think we're going to have maybe not as grand of movements in Amazon this year, but I think Amazon's definitely a company that we're going to see grow a lot, especially going into the future, because not only are they so involved in cloud, they still have their retail business, and they're also a big robotics play, which they're going to be automating their vehicles, automating their workers. In the end, their profit margins are going to end up being crazy. You know, currently they're sitting at 11%, but I think we can easily see this going into the 20s, even 30s in 10 years from now, as the company really accelerates. Next up on my list is Netflix. So I've been buying up a good amount of shares of Netflix as well too. As you can see, year to date they're down 7%. Over the past 3 months, they're down about 27%. And this is a company I've been looking at not only for shares but for options as well. They're down about 34-ish% from all-time highs. I personally believe the acquisition of Warner Bros. Discovery is very good for this company. That increases their intellectual property. They get access to franchises such as Harry Potter, Game of Thrones, House of Dragons, and other content that's on HBO Max, which alone is going to have a lot of new users use their applications. Now, one thing what Netflix is really good at is having sticky customers, right? We can see here that their customers, the subscribers that they have increased acceleratingly over the past couple years. But they're not only just good at acquiring customers, they're good at keeping them, which is like really well for their business model because they're revenue based. And we can see a similar thing is following here. Their revenue has been increasing about 17-16% a year, which I think it will continue to do so, if not accelerate down the line. They're starting to run ads. Currently, when you run Netflix, if you pause your show, they start running ads in between. They like minimize the movie or show you're watching and show you an ad or two. So I think that's another good way that they're adding revenue. And then this doesn't even take into account that with Warner Bros. Discovery, Netflix is going to be able to start making higher quality content. The movies, the film studios that they're acquiring are going to definitely have big impacts on the future of their content. Also, I think as Netflix starts doing more and more shows, whether it's UFC, boxing, even when they showed Alex Honnold climbing Taipei 101, these events are going to keep compounding. They're going to keep adding new avenues of content that they're going to put on there. They'll probably diverse into podcasts and other things, and their subscriber base is going to keep on growing, right? I think this stock is really pulled back, being in the 85, 85s. I've been buying shares. I got about I think 12 or so shares at about current levels. If I see this drop below 80 into the 70s and even below, I'm gonna keep buying because I think long term over the next 5 to 10 years, I mean, Netflix will be a great company, but I also expect to see a reversal in this trend later on in this year as kind of all the legal disputes settle down with Warner Bros. Discovery and we have a little bit more confirmation that the deal is gonna go ahead and go through. On my list, and certainly not last by any means, we have Adobe. So, very similarly, Adobe has been getting beat up for a while now. Over the past year, it's down 33%, even down 35% over the past 5 years. Now, the narrative with this company is that we have AI is going to disrupt it, right? You're going to have Nano Banana or some other software that they quickly make that is going to be able to take over Adobe's job, right? People are going to start switching to these cheaper softwares and kind of push away from Adobe, right? First thing I want to push on back on this with is total performance obligation, right? So this is essentially the contracts that Adobe already has set out. And as we can see, this is something that is still growing, right? At about 12 to 15% a year. They're still getting new customers, more licenses are going out and stuff like that. So the AI fears aren't really getting represented here. They're not losing customers by any means. They're still gaining customers at a very healthy rate. Double digit growth in customers, very healthy for this. And overall, I mean, their revenue keeps going up as well. So obviously, I think the AI fears are overblown. And I see this not only with Adobe, but overall is most software as a service stocks, whether you're looking at Salesforce, you're looking at Workday, all of these stocks are really getting hammered by the AI fears. And I've seen a couple of different things with a couple of different takes. Here's a few that really stood out to me. One, companies such as Adobe and Workday, they're companies that are highly in the Fortune 500 companies. They've had these partnerships for years. They've developed these partnerships. They have a level of trust, and we know that their product is safe. You're not gonna get hacked from using the Adobe suite. We know this is an established company that's been around for years. It is gonna use the customer data responsibly and not leak it or any of that, right? Whether you're gonna have people who make ChatGPT wrappers who do the software features, or you're just gonna have ChatGPT or Google do it themselves, it's won't have the same trust initially as the S&P or sorry, as Adobe and the other software as a service companies do with their current clientele being most of the Fortune 500 enterprise companies, right? Another thing is we're simply assuming that Adobe and other companies are just gonna sit about and not utilize AI. In fact, I think they have such a jumpstart in their field that as they incorporate AI into their tools, into their software, it's only going to get better, right? You're only going to improve the software. People are going to become more efficient with it, and it's just going to make it more of a need in these enterprise facilities. So I think overall, I mean, even just looking at the valuations, PE ratio of 17.9 is below the market. The profit margins are 30%, which is crazy, right? 30% profit margins are beautiful to look at. I think overall, Adobe is just being hammered right now. This is another thing. We're seeing that management is progressively buying their shares back, which just means that they're confident in their company. It's going to keep going up. So I think Adobe overall has been getting really beat up, very similar to Google last year, with this narrative that AI is going to completely replace its need. But slowly and surely, as consumer sentiment changes, I think Adobe is going to have a pretty substantial upside reversal that I'm expecting. We'll start seeing some of that showing off towards the later parts of 2026. Is overall the whole software as a service industry kind of takes a deeper breath and people realize that the AI concerns are a little overblown when it comes to impacting these companies. Now, with this being said, it was really hard to compile just a list of 3 companies. I think there's a lot of companies that are going to do exceptionally well in this upcoming year. Just another one that I want to leave as an honorable pick is ASML. Now, while this company's already had amazing returns year to date, 23%, and the year's been, what, a month in max. Um, Crazy returns overall. I am a shareholder of ASML. They have the bottleneck, they have the monopoly when it comes to all of AI. So it's an absolutely phenomenal company that I don't think you can go wrong with. They even had earnings yesterday and they doubled their bookings, as we can see here, right? From 5.5 billion to 13.2. So I think this is another great company to hold for the long term, which I think will do really well this year. Given that they make the 400 million dollar machines that are responsible for every single chip that is produced, and these chips are crucial for all AI functions. Right. Another company which I think um, will do really well this year is Uber. Um, Uber is kind of facing a similar scenario with AI scares, except instead of AIs, it's kind of robo taxis. Whether that's the Waymo, whether it's Zoox, whether it's the Tesla robo taxi, it kind of has a fear that it's gonna get disrupted by these. But again, I think they have this much of a first mover advantage where they know they have the data for all these different cities, and that data alone is so valuable. Plus, as we can see, their monthly active users are going up, the amount of trips they're doing are going up, revenue's going up, everything is going up and to the right. So this isn't not a dying company by no means. It's a company that is constantly growing. I think what they have to leverage is one. I mean, I'm sure Uber is not just gonna sit behind and let all these robot taxis overtake them. They're already working on this. I mean, we can even see here Uber, Lucid unveiled production intent for robotaxis, right? Even here on the news, we can see that they're not sitting back. Um, I think they have a big first mover advantage over the robotaxi companies. They know their clientele, when they like to Uber, how much they like to Uber. They know how many people to work at a certain time and stuff. So they have the data that will really get them going. So I think this is another honorable pick for 2026. But with all this being said, by no means is any of this financial advice. These are just my thoughts on companies that I think will perform really well in 2026. Um, I am invested in most of these to a certain extent. Again, this is what I choose to do with my money. I'm confident in these companies. I think they will do well going forward. If anyone is curious, the website that I use is Qualtrim. It's made by a YouTuber I really enjoy, Joseph Carlson. Um, and then, given that I've seen a lot of these YouTube videos come up recently about people choosing their top picks for 2026, figured it would be a fun little thing for me to do just to see how I perform compared to them and to the market. I'm sure I have a long horizon ahead of my investment journey. In the future, I might look back on this and think I could have made better choices. But it's always easy to look smart when you're looking backwards, right? So these are my top three picks for 2026. Do with that as you will, but this is not financial advice. Hope you guys enjoyed this video, and let me know what stock you're most excited for down below in the comments. Take care and make it a great day. Bye bye.